Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I've been following him on Twitter for a long time now. He's an investment manager at Equity Management Associates and also a gold stock fund manager. Lawrence Lepard, thank you for joining me.
Thanks for having me on, Jason. It's an honor to be with you.
Great. There's so much interesting things going on in all the different markets, but especially the gold market. A lot of interesting topics about gold and silver that we'll get to with the premiums, the divorcing between the paper price and the gold price like in 2008, and, of course, the coronavirus outbreak that's going on all over the globe. So let's start with the coronavirus outbreak related to miners, since I get at least a half a dozen emails and messages per day asking me for updates on this. I'm sure since you're a gold stock fund manager, you also get people asking you. So have you actually heard of any specific cases at any of the mines yet of coronavirus outbreaks?
I am not aware of any corona cases at mine sites. I have heard of, I get emails from all the companies about what the corona policies are and so forth. I have heard a couple of companies, at least one company in Toronto, I believe it was Kinross, had an employee that attended the PDAC, Prospect Developers Conference, in early March that came down with corona and then went into quarantine. And I believe there were a couple of other PDAC attendees that were highlighted as having got it. So there was some of it at PDAC. The companies that have been sending me emails have said that in most of their mines, what they've gone to, and one of the advantages about the spread of this disease as it relates to mines is that many of these mines are in remote locations and they're really mining camps. And so, you know, the virus isn't going to be there unless somebody brings it in from the outside. And then now everyone's now very aware of the dangers associated with the virus. So, you know, a fuel supplier or a food supplier is going to have to socially distance themselves and be very careful in delivering things to the mine, and they'll probably sanitize things, et cetera. And so hopefully, you know, you won't have transmission into the mine. I suppose if employees are on cycles where they leave and go back to society and come back, that would be somewhat of a risk. But I'm sure that now that everyone's aware of the danger associated with this virus, I bet that the mines are relatively, compared to, you know, living in a big city, I bet the mines are relatively unscathed. At least that's my hope.
Yeah, so as of now, I'm on your side here. I have not heard of any specific cases, and I've asked around. I've asked my mining industry contacts as well, like Nolan Watson and others, and they have not heard of any specific case or outbreak at any of the mines. Now, that does not mean that we don't have governments like Peru or governments like Argentina that, as a precaution, are issuing 14-day quarantines to precautionary shut down mines temporarily because they're worried about an outbreak. But that doesn't.
I was just going to say that.
I've seen. Yeah, go ahead.
Yeah, I was just going to say that Pan American Silver announced that they're obeying the Peruvian government's order to shut down their mines for 14 days. So it has affected some companies in the industry, but I think that's the exception, not the rule.
But Pan American Silver reiterated in the press release, right, that they don't have any outbreaks. They're doing it as a precaution, though, and they're following the law.
Exactly. That's exactly right.
Okay, so this is something that we'll have to keep updated, but we've recently, Sandstorm Gold, as a, I would say, more conservative measure, they removed guidance temporarily because there could be some of these quarantines on mines, but, you know, that's erring on the side of caution. I think we're going to see that from more mining companies. We just saw a news story out from Yamana Gold and Cerro Moro that Cerro Moro is going to partially shut down some mining for 14 days and then it'll go back, but they don't have any outbreaks there either.
Right.
Okay, well, let's move on then to actually the mining industry, since this is something that you do full time. So the oil, right now when we're recording this interview, it's on Friday, March 20th. The gold price is below $1,500 again at 1,487, been extremely volatile. The silver price has crashed over the last, I would say, 2 months. When it was, I remember it was over 18, and now here we are at $12.45 on the paper price. Just insane how much the silver price has crashed. What are your views on the margins for gold and silver miners? Do gold miners have a lot better margins than silver miners right now? And do you think that the oil price crashing down below $25 a barrel on WTI has helped the miners out a little bit?
Sure. So gold miners have much better margins than silver miners because the gold on the year, gold is roughly flat. It was up. It's down from the peak before the, what I call the financial market crash, but it's roughly flat, and they were making good money at $1,500 where it is now. So gold miners are fine. Silver miners have been very severely impacted. And both benefit obviously from a lower oil price. The issue is, are they on the grid and how much oil do they use? Each mine is different. Many use heavy diesel, and ultimately lower oil prices will flow through to lower diesel prices. I understand and believe that diesel is maybe, oil is maybe 20 to 30% of the cost structure of the average mine. I'm sure there are cases where it's more or less, and I don't know where oil was before this whole collapse. I think it was in the 40s and maybe in the 50s for, kind of the fourth quarter of last year. So, you take that and cut it in half. So if you have 20% of your expenses get cut in half, you just got a 10% increase in your profit margin, or over your revenues. So that's a good thing. And I would add that it's interesting that going forward, let's say the stock market crash does lead to a Great Depression or some kind of a fall in demand for everything. Gold miners compete with other miners for all kinds of supplies, explosives, moving equipment, just everything that goes into making a mine. It gets used by gold miners. It also gets used by people who mine, cobalt and steel and copper and all the things that are going to be needed in the economy, but in an economy that's shrinking, they're needed a whole lot less. And so all the inputs to mining gold will probably be falling in price if the economy slows down as much as it appears that it will. And so that should increase gold mining margins. Last time this happened was the Great Depression in the 30s, and gold miners became enormously profitable because in that case the price of gold didn't go up as much. It reset from 20 to 35 when Roosevelt reset it. But more importantly, all the input costs went down because everyone was unemployed, labor costs were low, there was a Great Depression, every input that you used got cheaper. And I actually think this financial collapse could look somewhat like the 1929 collapse because that was an enormous credit bubble, and this is an enormous credit bubble. And so, I think the fundamentals for miners have never been better. I mean, falling input costs, and a rising sale price, these things are going to throw off cash, and they're still very, very cheap. My portfolio is full of companies that are trading at 3 times cash flow.
Yeah, I agree with you about the margins for primary gold miners. I think the margins are still going to be, despite the paper gold price correction, the margins are going to be very good because the oil price has fallen more than the gold price has on a percentage basis. And my friend Steve St. Angelo, who covers the mining industry extensively as well, he says, and I've interviewed other gold fund managers too, normally the consensus is about 33% of all the input costs is energy input costs. So it's an intensive part of the business is energy input costs, about 33%, give or take. So with the oil prices falling that much, I think the oil prices did, for a good amount of 2019, they were still 60 or 70 a barrel on the rally. Their oil prices did rally for a good amount towards the end of 2019, and then they peaked first week of January, and then the collapse started. So this is really benefiting the gold miners.
Right, but one thing to keep in mind, Jason, is you say you're right. I agree with you. Energy costs maybe are 33% on average, but some of these miners do have grid energy, so they can run the mill off electricity that they can buy off a grid at a low kilowatt hour price, particularly in Quebec and so forth. But all of them are probably having, if they're above ground, certainly if they're open pit, they've got trucks that are moving ore, and others are, doing all their energy on diesel because they're not on the grid. So, in computing the cost structure, it's important whether they're on the grid or not.
Do you think there would be, if oil prices were higher, do you think we would be talking about silver miners potentially going bankrupt in the next couple months because of how much silver price has fallen?
Yeah, I do. I don't think, at $12 silver, my understanding of the industry is that a lot of silver mines aren't going to be economic at $12 silver. And, I obviously the falling input costs will help. And a lot of the silver that gets mined is a byproduct of another mining process. And Silver Wheaton, of course, took advantage of that they're mining something else and they happen to find some silver and they sell it in a stream. So that silver won't get impacted. But some of the more pure play silver mines in Mexico, I don't think they do particularly well at $12. And on the other hand, I'm of the belief that this is very much just a huge deflationary impulse brought about by the collapse in stocks. And silver, being both an industrial metal and a precious metal, is much more subject to that deflationary collapse. I mean, it's high beta gold, and if everyone thinks the economy is going to grind to a stop, it's going to go down just the way oil went down. So I don't think that condition lasts, because I think, one, the economy is going to slow down, but it's not going to entirely stop. And two, silver does have a precious metal component to what it is. And once the deflationary impulse ends, which I think it will, I think silver will easily bounce back. And maybe not right to 18 or 19, but back into the, say, call it 16, 17 range, which I think allows the silver miners to survive, maybe not with great margins, but with acceptable margins.
Yeah, I'm looking at a chart right now, the gold to silver ratio, and it is absolutely insane. Since about February 20th, it has gone completely and totally parabolic. I thought the gold to silver ratio was high in February 2020 when it was below 90, right around that range between 80 and 90. But now we're almost we're over 120. Well, we were over 120 until the last couple of days. We got up to almost 128 on the gold to silver ratio. That, to me, besides the paper price manipulation, the demand for physical metal outside the paper market, says that a lot of people are at least betting that the demand for industrial demand for silver has collapsed.
I think that's right. I mean, it gets used in solar panels and other things, and while the industrial demand may have collapsed, it's interesting to note that the investment demand has gone parabolic as well. I spoke to my coin dealer recently, and he buys from Texas Metals, and they just sent out an email to him which said that basically the demand for a lot of coins had gone up 10x or more in a period of 5 days. And if you try and buy an American Silver Eagle from any of the major coin dealers in the United States today, and it's hard to do, most of them are out of stock. But the ones that are in stock, the going price is $24 a coin, or $22 to $24 a coin, which is a far cry from the $12 that you see on the spot price or at the COMEX price. So, I think you're seeing something very important here, which is the beginning of the separation between real physical metal and paper metal. And I've long contended, I believe you believe the same thing, that the paper metal price has been suppressed in order to hide and mask the inflation that the central banks have created. And the only way for that to end is for people to demand delivery of their physical. And, this fractional reserve system where they sell paper for metal that they don't have is eventually going to fail. Very similar to the way the London Gold Pool failed in 1968. So, so, the fact that, silver, COMEX will tell you silver is $12, and, okay, so sell me some at that price. Well, we're not going to do that. You could go take delivery of a COMEX contract, and I did that a bunch of years ago. It's an enormous pain in the ass. And furthermore, I think there's a chance that COMEX will fail.
How long did you have to wait?
Well,
how long did you have to wait for delivery?
Yeah, I bought the contract near the end of expiry. I waited for the last notice date. I waited for expiration. As I recall, it was about 2.5 months before I actually got the silver. And they make it difficult. There are only certain places they can deliver it. And they want Brinks to deliver it to you, and that's going to cost a lot of money. I ended up driving to Westchester County, New York, and putting 700 pounds of silver in the car, in the trunk of my car, and bottoming out the rear shocks and driving back home. But they tried to discourage me from doing that. It was really interesting, the process. I went into a warehouse with some armed guards in it, and an awful lot of silver. It looked like something out of Raiders of the Lost Ark. And they discouraged me from doing it. It was very hard. That's not what they're set up to do. They're set up to trade the paper. But if enough people ask for delivery, they're going to have to provide it, or they're going to fail. And I think we could be headed in that direction. We'll see.
Yeah, things are starting to look a lot like 2008 and 2009. I have another friend who bought a 1 ton of physical silver on the COMEX in, I think, 2009, and it took him, this was Jim Poplava of Financial Sense NewsHour, if you're familiar with him, and it took him, so the COMEX warehouses said they had plenty of silver, but they made him wait over 6 months for delivery.
Right.
So he got the low paper price, right? After, I think back then silver crashed from 21 an ounce down to below 14, and, just an enormous crash.
I think it was cheaper. I think it was cheaper. I think it was 8 or 9, because I remember I bought a lot of coins at that time. Yeah, I think it went lower.
8 or 9. Oh, yeah, that's right. You know what I'm thinking? The premium was like another $7 or $8, and that's what made it so it never, the buying the physical metal online from like eBay or a bullion dealer, you never got the $8 or $9 price. That's what I'm thinking.
Maybe,
so you never got, so if you were going to go on eBay or you were going to go to your bullion dealer, you were not going to get that $8 or $9 an ounce price. David Morgan, also my friend David Morgan, what he was doing was he was buying, I think, the 1,000-ounce bars, and he was going to his refining friends, and he was having them melted down into rounds. So then he was collecting that premium.
Nice.
That's what he was doing at the time. Yes, if he was collecting big premiums, he was able, through his contacts, because he is the silver guru. So he knows the refiners, and he was buying those. Yeah, so he's buying those discounted bars very close to spot, and then collecting premiums off of that.
Right. Yeah. The
silver miners are The silver miners are clearly getting killed by the paper price. Do you think there's more cost to cut here? Because, the silver miners, they were in trouble a year ago, early in 2019, until we had the big rally in gold and silver, and then it helped a lot. But from what I was hearing back then, even when the metals prices were rallying, there still wasn't a lot of capital available to the miners. So their margins were better. They were starting to generate some free cash flow. So their balance sheets were improving, but they still weren't able to go out and raise anywhere near the levels of the capital that they wanted.
Yeah, I think it's important, to understand. I call it the battered precious metal bull syndrome. Everybody in this area is so battered from, the experience of from 2011 to 2015, getting our teeth kicked in, and then we got a nice rally in 2016. Everyone thought, okay, maybe it's over, and then no, we got our teeth kicked in again. And so, we broke out last summer on gold. It was 1365 that we took out. And a lot of people thought, they don't believe it. They're kind of like, yeah, this is Lucy in the football. It's going to get yanked again. And so, and frankly, this week didn't help, right? Get a big margin call and people who were scared, dump it. And so, it's bull markets, I guess, are hard to ride. I haven't sold anything, and I tend to stay with it. But I get it. If you're on leverage or margin, or you buy JNUG, you get crushed if you can't hang on. But my opinion is that we know where this is going. We know what the people who run the system are going to be forced to do, because the alternative is deflationary collapse. Everything's a pile of dirt and we're all bankrupt, and they just can't do that. So, given that they can't do that, they will print money. And obviously, we've seen the biggest announcement and rate of printing money in the history of the world. It's just in the last week or week and a half. So, this is kind of looking great, GFC-like. And this is just the beginning. It would not. The Fed balance sheet started this at, in the 4 range. It wouldn't surprise me to see a Fed balance sheet of $16 million, $30 million, or $30 trillion. There's a huge hole that's been blown as a result of the collapsing of their paper bubble in bonds and in stocks, and by the way, soon to be in bonds. And they're going to have to continually fill that hole, and there's only one way to do it, and that's print money. And the precious metals will smell that, and people will say, "Hey, these bonds are going down in value. My real interest rate is very negative. I'm not holding this paper. Here, Fed, here's my bond sold to you." Then the Fed has to print money to buy that bond because nobody else is buying that bond, and that makes the problem worse, right? Printing money makes more inflation. So they're in a doom loop, right? They print money, it makes inflation bad. As people see inflation, they sell their bonds. That makes them print more money, and all the while, the thermometer of this problem is the gold price and the silver price. And so, we got a big negative impulse here as a result of this margin call. But, I think these two things are going to take off like a scalded dog, sometime in the next month or two, and never look back. And, those of us who've suffered so long with this thesis are going to be rewarded, I think, kind of beyond what we ever hoped for. So I'm just hanging on because they can't fight the laws of math. I mean, the mathematics are just really clear.
Yeah, if you look at the global macro situation, like you said, I've heard in the last week or two that credit markets completely froze and the corporate bond markets have completely frozen up. So the value of these bonds is collapsing. You have hedge funds, large hedge funds that are doing the risk parity strategy, which is buying bonds on massive amounts of leverage, 10x or more, using the repo market. They've been doing this for a while. Those hedge funds, from what I've heard from my contacts, are blowing up. And the Fed now, all these press releases almost every day, there's a new alphabet soup bailout facility that the Fed is implementing. They're dusting off the old 2008 bailout programs, and they're just implementing them. I think the new one today was the Fed's going to buy municipal bonds.
Right, and the reason for all that, Jason, is we all know that they just don't have any choice. And they're like the guy, like von Havenstein in Weimar, Germany. They can either have deflation now and the whole thing collapses in a heap. They can print, try and keep it together, risking inflation in the future, and any politician will always take that second choice, even though that's going to end badly too. Their goal is to defer it long enough that they can, and hopefully and pray that they can solve it, but they can't. It's the way the system is set up. They just can't. And so, this is going to cause the precious metals values in dollar terms or in fiat currency terms to be, orders, multiples higher than they are today as we go forward. Right now, however, people say, well, that's great, but, that doesn't do anything for me today. I just got kicked in the teeth again. And I did too. Last week was brutal, and this week has been a little better, but not that much. What we got to recognize is that this is very much like 2008, and that's, we saw a margin call, and there are people who had gains in the gold stocks, there are people who had gains in gold, and in a margin call, you just sell whatever's liquid, and so people have dumped this stuff, and but that won't last.
Or whatever's profitable.
Yeah, exactly.
Or whatever's profitable. So if people have profits on gold, silver, or gold stocks, they're going to sell those because they're risking insolvency and bankruptcy from their leveraged bond trades and their leveraged margin stock trades going bad.
Exactly. And in some cases, these are the things they should be hanging on to, but in many cases, I know people like this, they're kind of like, well, I got to go buy the dip and the other stuff that's sold off so hard. And, I actually think, this market is going to educate the buy the dippers that that's a terrible strategy. People who buy the dip in this market, they're going to get wiped out because this thing was such a big bubble that it's only just begun to go down. Could we have some big bounces? Absolutely, we probably will. But, I would make I have a very high confidence in the bet that a year or two from now, this market will be lower than it is today. The ripple effect that the virus created and, the unwinding of everything, it can't be stopped now. And think about what happens when bubbles pop. Think about what happened in the dot-com bubble. The NASDAQ lost 80% of its value. Think about what happened in the housing finance bubble. Similar story to the housing stocks. Most of them went BK.
And
right?
And the corporations were not leveraged like they are now.
Right.
So your Coca-Colas, your Disneys, your large corporations that actually sell good products and services the consumer uses, they weren't doing crazy amounts of financial engineering that they've been doing for the last 10 years with buybacks and, the get-rich-quick.
Exactly. It created the bubble was as big as it was because of the unnatural low interest rates that the Fed, did post the blow up in the GFC for years. I don't know when the rate. I think the rate increases started in 2014 or 15, something like that. So there was ZIRP for 7 years of free money. Well, okay, you're a corporate manager, you figure it out. Let's see. If I got this clean balance sheet, I'll borrow money, I'll rebuy my shares. That'll shove the share. Even though my earnings aren't growing and my revenue's not growing, my stock price will go up because there'll be less stock out there. those warrants I gave myself or options I gave myself will be worth millions, and I'll cash in. And, yeah, the company will be more leveraged, but that's no big deal. And it really won't cost us that much because interest rates are low. Well, that was all great, and that all worked, and it shoved those values up, and, the stock values up. But, now we're seeing the other side of that. And, it's really going to be
revenues
quite
have collapsed.
I'm sorry?
So these companies still have the debt, but revenues have collapsed, cash flows have collapsed. They can't service the debt. So what everyone is worried about, the next shoe to drop that I've heard that's coming, and you've already seen this with ExxonMobil in the last week or so, is credit ratings downgrades. And what did ExxonMobil do after they got a credit ratings downgrade? And I'm pissed off at management for doing this. They went and borrowed another $8.5 billion, even though S&P credit ratings agency put them on a credit warning watch list, on a credit ratings watch list for another credit rating downgrade. They borrowed even more money. So these corporations now are looking at 1, 2, maybe even more credit ratings downgrades, which then once those happen, that's going to spill into the corporate bond market, and the value of those bonds are going to plummet, and those are going to go from maybe investment grade bonds to BBB or to junk very, very quickly, quicker than most retail people can fathom.
I think that's absolutely right. I think we're going to see a large number of bankruptcies, unfortunately, because highly levered businesses are brittle. If their cash flows shrink, that leverage. I mean, if you've got a good business and you have a business downturn, you don't have any debt, you just cut back your employees, and maybe you're not making as much profit, but you're around to ride the next upwave. If you got a lot of debt and your business turns down, it doesn't take much because the debt is there and it has to be serviced. And if it can't be, and that's the other thing. I mean, rising interest rates. Everyone thought, well, let's borrow this money because the rates are low. Well, didn't anybody ever think of the fact that maybe rates would go up at some point in the future? And so, yes, you might have some old low-cost debt, but, future rates are going to be much higher. It's going to be more expensive to service. So it's really quite an extraordinary bubble. Go ahead.
Lawrence, the senior executives don't expect to be around. Their goal is to get rich quick, beat the earnings in a year or two, make an extra $10 million, $20 million, $30 million in stock options and bonuses, and get the hell out before everything collapses.
Completely agree. I mean, that's what, in Devil Take the Hindmost, a really good book. I mean, that's what a lot of financial people do. And what, in my opinion, what the government should do is the condition for these bailouts is that any company that was doing stock repurchases, any company that asked for a bailout, the condition should be if they were doing stock repurchases, the executives should forfeit all the profits they made from selling stock options. Because really it was just a form of theft. I mean, they were stealing from the shareholders of the company. They were using it was fraudulent conveyance. They were using the leverage to make their compensation larger and then screwing the underlying shareholder and pension holders and everything else. I mean, I look at General Electric. It used to be a great company. Jeff Immelt, who ran it, walked away with $650 million in profits. He's building a $20 million house in Nantucket. And the thing's close to going BK, and they're going to have to cut back all their everybody who worked at that company isn't going to get their pension the way they thought they were. It's criminal. It's absolutely criminal. And, the government and the Justice Department, nobody goes after them because, most of our government's corrupt and the Justice Department has no teeth because, they all want jobs in industry, not, to enforce the law in a fair way. Look, long term, Jason, this is all, the real bad news is this period, while it's going to be profitable in a sense for gold and silver investors, it's going to be bad for the country and for conditions. But there's a good news to the other side of this, which is this is going to lead to the reform that is so badly needed. The world is, the political world is just so broken. Everyone can see it, and they're not going to get away. They're not going to get away with it this time. This collapse is going to be bad enough that people are going to go to jail. And a new group of politicians that are honest will arise, and people will flock to them in droves. And I think there'll be a third party. I think the old Democratic Party will die. I think the Republican Party will die. They're both equally corrupt. So I guess and some people say, well, you're wrong. It's all going to be worse in the future. Blah blah blah. No, I'm an optimist. I mean, if you look at the human condition for 5,000 years, we've made progress. I mean, this is going to be a really big setback, and that sucks. But, let's look at the positive side. This could be used for enormous reforms. And, I'm 62. I want the world to be a better place for my kids and my grandkids. And I think that's, if we do it the right way and if we look at the bright side of it, I think that's what will happen. This collapse will lead to reform. Those of us who make a ton of money in these gold and silver positions and gold and silver share positions, I think our obligation to society is going to be to contribute, to try and educate people about the value of sound money and to try and, point out why we went wrong. I mean, I think, Ben Bernanke should be in the history books right next to John Law or Rudolf von Havenstein or Gideon Gano. I mean, all guys who created hyperinflation in their country. I mean, when Ben Bernanke gave the helicopter speech in 2002, I fell out of my chair. I was like, really? The head of the Federal Reserve is saying we've got a printing press that can solve deflation? I knew right then and there we were screwed. That's when I started buying gold, $300 an ounce, and sure enough, I mean, it took a long time. I mean, that was 2003, so that was 17 years ago. But, sure enough, it happened, and here we are today.
That's funny you bring up the Ben Bernanke 2002 helicopter money speech about fighting deflation, because I've heard the last week a lot of mainstream financial professionals say nonstop how the Fed is out of ammo. And then I was repeating, I did a show on this earlier this week, that people need to either read that speech or go and reread it, that the Fed has plenty of ammo left, and they're going to fight deflation. They're going to change the accounting rules if they have to. They're going to start buying Ben Bernanke and Janet Yellen were already talking about buying corporate bonds earlier this week. Yep. They may start copying the Bank of Japan and buying exchange-traded funds or stocks. The bailout packages, both political parties, Congress and Democrats and Republicans in Congress are talking about versions of MMT, QE stimulus programs, the checks that we're supposed to be getting in the next couple of weeks. So, there was arguments that the Republicans would not be on board for MMT, QE, and clearly that argument for over a year now, that argument's moot because both political parties in Congress seem on board with that now.
No, absolutely. I mean, they have to do it. I mean, that's what people don't understand about the mathematics. These people are not, they're not even if they wanted to do it differently, they couldn't. I mean, the mathematics dictate that to keep the economy going, to keep the ATMs running, to keep everything functioning, they've got to print ungodly sums of money. And if they don't, the whole thing will freeze up. And, printing ungodly sums of money is bad because it's going to lead to hyperinflation. But not printing ungodly sums of money is worse because literally, everything's going to freeze up. The ATMs aren't going to work, and, we'll be fighting in the streets over food. So, I'm pretty sure that of those two choices, we're going the hyperinflation route, which is very sad, by the way. I've never rooted for this at all. But, it is what it is. I've analyzed it and seen it, and it's clear that this is what will happen because this is what happens when credit bubbles burst. I mean, this is similar to 29. Why didn't we have hyperinflation at 29? Because we're on the gold standard. Well, instead, what we did there was we liquidated everything. We had an enormous depression, okay? But at least the money stayed sound. I mean, they did devalue the dollar from 20 to 35, 70% devaluation. I think it was a little more than 70%. But, they at least the dollar stayed sound because there was gold behind it. But this time around, we're going to get both a depression and hyperinflation because the dollar's not sound. And the solution they're going to use Go ahead.
That was only international gold standard, right? So after FDR devalued the dollar against gold and it went to $35 an ounce, the Americans were not allowed to own gold.
You're right.
It was only foreigners who were allowed to convert. So
you're right.
So it wasn't a full gold standard. It was just an international. Yeah, it was an international standard only.
No, that's correct. But also they didn't go as hog wild in printing the money, and they let the debt liquidate, which was part of why it was such a bad depression. I mean, they net let prices fall. I mean, they didn't have the transmission mechanism to give money to the banks and the banks to loan it into existence, and they hadn't even thought of the whole. MMT was like way beyond their range of thinking. But of course, we've had a lot of people talking MMT, and we had Andrew Yang talking about universal basic income, and we've had a lot of socialism since that time. And so, isn't it amazing that the Republicans who were vehemently opposed to MMT, this happens and bang, we're right there. Let's send everybody a check. And that's the ultimate in helicopter money, right? And by the way, this is just jacks for openers. We'll send them to, you send a small check, guess what? Next thing people are going to want is a bigger check, and that's not going to be enough, and then you need a bigger check still. And, you can see where we're going here, right?
And this is why a lot of people are going to gun stores. This is why the demand for silver rounds, American Silver Eagles, for silver bars. Right. I'm on the AppMex website right now, and the pre-order for American Silver Eagles is over $22. That is a $10 an ounce difference from the spot price, basically. I'm looking at silver rounds. A lot of the silver rounds are sold out, and you have to get an alert. And there are some 1 ounce silver rounds available, but it looks like a $7 an ounce premium just for rounds. And the bars, let me see the bars here. See if I can even find a 10 ounce bar that's for sale. There's a couple, but most of them are out. Most of the 1 ounce bars are gone from AppMex.
What are the prices?
They have one at the top there. It's a Chinese New Year one, Year of the Rat. It's $188.
So $18. Yeah. Yeah, $18.80.
So you're paying significantly. You're paying some big premiums to get your metal. I heard from another listener that it was $12. He was looking at another coin shop that it was $12 an ounce premiums on a 10 ounce bar or something like that. I don't know which coin shop it was, but it's pretty crazy. Like we discussed earlier, I've heard some wholesalers are even out. Normally wholesalers have plenty.
Right. No, the market's very tight because people understand what the issue is, and and by the way, I bought some American gold, some gold eagles, or actually buffaloes, and then Canadian maple leaves a couple days ago, and I paid a big premium, and I didn't care. The premium was probably $100 over the spot at the time, and I just didn't care. The supply was there. I wanted them, and does it matter if I pay $1,500 or $1,600? When I think it's going to be worth $10,000 an ounce or $100,000 an ounce? In my mind, it didn't matter. So I just paid the premium and got them. And interestingly, I went back. I thought, I didn't buy enough. I'm going to go back and try and get some more. I went back, I logged in to try and get some more, and they said they were out of stock. So I'm glad I bought what I did when I did.
Want to hear something kind of funny? Like 6 to 8 months ago, people were asking me who didn't have money to buy gold and silver what they should do. And I was like, well, you can stockpile. Like once each month, you can buy an extra package or two of Charmin Ultra, one of the Charmin toilet paper packages, right? So each month you're accumulating, and now here we are, right, with shortages. That's almost like gold or silver now.
Yeah, so those are easier to make, and that'll come back into the supermarkets. What's going to happen there, in my opinion, and with a lot of food, is we're going to, a lot of people haven't studied World War II. World War II, everything was needed for the war, and so there was rationing. And so, what could happen here very easily, in my view, and it's already kind of started at the supermarkets. My supermarket, you can only buy one order of chicken or one order of beef, and you can't go in there and clean the counter out. They'll only sell you one big package of toilet paper. So and it's a short step from there to the government issuing coupons and saying, here's the amount you get. The country's tight. And that could happen. So it's really a terrible set of events. But for those of us who've studied it, it's not terribly surprising. I always kind of had this as a strong possibility, and I think what's shocking to me and to others is the speed with which it's happened. It's just been stunning. It's very hard to adjust to. In most things in society, you can see them coming, and you can make some adjustments. But the way the virus popped up and then the implications that it had for the stock market were it's been kind of the perfect storm of trouble. And I'm sure there are a lot of people who are hurting and a lot of people who are scared. And, the human race has made it through a lot of things, and the virus will pass. The virus is very bad, obviously terrible for those who get it and die. Tragic beyond belief. But we're not all going to die. And and if we socially distance ourselves and we're careful, the number who are going to die is going to be, a lot less than if we don't socially distance ourselves. And there is an end point. This virus will burn itself out. It has to. and so life will at some point return to normal. But that could be 6 months from now, and there'll be a lot of economic damage between now and then, unfortunately.
Or 12 months or 18 months, depending upon how long it takes for herd immunity or a vaccine, yeah.
Yeah, it could be. I mean, I pray it's not that long, but it could be. Yeah, it could be. I mean, a vaccine will emerge at some point. Herd immunity will build up over time. And, but it's not a forever thing. I mean, I'm talking to my kids who are freaked out that, their lives have changed forever. And I said, no, this is, the Japanese just bombed Pearl Harbor, or, the British just marched on Lexington and conquered. I mean, this is a fourth turning kind of event. It's a really bad thing, and it's going to be rough for a while. But,
the other fourth turning is that governments have
Go ahead.
You mentioned fourth turning. The other thing is governments have mishandled this. All the governments, the Chinese government, the Japanese government, the U.S. government, it seems all the governments have mishandled dealing with preparing for the virus.
Absolutely. And so I think the theme, look at every prior fourth turning. The American Revolution is a fourth turning. The theme there was, freedom, liberty, individualism. Sorry, King George, we're out of here, right? The Civil War was a fourth turning. The theme there was, human rights, slavery, emancipation, etc. Country split in half, and the good side won, right? The Depression, World War II, the theme was, fascism against freedom, and we won. The good side won. And in my opinion, in this one, the theme is, individuals versus the state, and, state-run money, fiat, which they've abused, and state-run power, which they've abused, and state-run corruption, which they've abused. The perfect example, just the last couple of days, you got these senators who get a briefing about how bad it's going to be, and they go out and they dump all their hospitality stocks. These people in Washington, D.C. couldn't have scripted a better way to just blow up their credibility. And, people are going to fed up, when everyone gets wiped out, this country is going to be fed up, and we are not going to take it anymore. And so a lot of people think, well, the powers that be will figure out some other way to enslave us. I say bullshit. There are a lot more of us than there are of them. And, the powers that be are going to end up in jail. That's my belief, and that's what I'm going to work to make happen. So I'm optimistic about, the other side of this. But I'm fully, my eyes are wide open for how bad it's going to be, because it's going to be pretty bad in my opinion. So.
Yeah, I'm not optimistic about solutions from the political system. I think it's broken. I think people have to do solutions.
No. The existing political system, no. But, I think people will be pleasantly surprised about some of the new leaders that emerge. And I think that, problems can be solved. They can be.
Well, I want to thank you for your time today, Lawrence. If our listeners want to follow your work, want to follow you on Twitter, maybe take a look at your gold stock fund, how did they do so?
Oh, yeah. Thank you so much for that. So I'm on Twitter, and I tweet a lot. My name is Lawrence, Lawrence, Lepard, Lepard. So my Twitter feed is just those two names together, at Lawrence Lepard. You can reach me on there, DM me, whatever. If you write something on one of my comments, I'll follow you. And then I also have a gold stock fund, which I manage. It's got a lot of my own money and other people's money in it. It's a private partnership. Accredited investors can invest. The minimum is $50,000. It's done well. I did very well last year. I was up 97%, which beat my index of 30, the GDXJ of 38%. But frankly, it's down a bit this year. Obviously, the gold stocks are down. Could be a buying opportunity, but it has risk, so it's only appropriate for certain people. But I do want to make your listeners aware of it.
Okay, great. Well, I enjoyed this discussion, and I think you provided a lot of good insights into the gold mining industry. I want to thank you again for your time, and we'll have you back on in the future to talk about the gold mining industry, hopefully in the next 6 months. Hopefully you're right about your estimate that 6 months from now this will all be passed and the problems with the coronavirus will be passed. But I'm a little bit more skeptical about the 6-month timeline. But I think gold and silver, the timeline for $2,000 an ounce gold, based on all the crazy stuff that the central banks are doing now, especially the Fed, has moved up.
I completely agree, and I really enjoyed talking to you. I enjoy interacting with you on Twitter, Jason. I'll look forward to it. Let's stay in touch. I'll come back whenever you like.